Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar remains on the defensive as a softer Australian data and fading RBA tightening expectations contrast with an increasingly hawkish Federal Reserve. Rising employment, weaker PMI data and signs of slowing domestic activity have reduced expectations for further RBA hikes, while resilient US economic data and many comments from the Fed continue to support the US dollar. Markets are now closely watching Fed Governor Christopher Waller, whose speech for the first clues on the US interest rate outlook as inflation risks tied to the Iran conflict remain elevated. As we look at the technicals, they have improved since the slight pattern that's forming here, looking now towards a resistance of 71.85. But like previously, supply is still lingering and we could still see a down test back towards the bottom side around 70.80. Turning to the euro, the market was a little bit mixed, helped by signs of improving eurozone economic data, although the broader backdrop continues to favour the US dollar as the Federal Reserve maintains a more hawkish stance than the ECB. Markets are now increasingly focused on new Fed Chair Kevin Walsh, with traders pricing a growing chance of US rate hikes returning by year end as inflation risks tied to the Iran conflict and resilient US economic growth continue to build. At the same time, several Fed officials, including Christopher Waller, have shifted towards a more balanced stance on rates, warning that inflation risks may still require tighter policy if price pressures remain elevated. With that said, downside pressure on the euro appears to be slowing, as we can see from the slight gap that on the open of Monday. Nevertheless, I still feel the market may, like the Aussie, fail towards this topside challenge, anywhere of 116.45 to 70, and look back towards the bottom side around 115.5 to 115. Dollar yen, well, we've got a gravestone doji here, and the market may actually show, as we can see here, a more of a drop. And if so, could be looking towards the region of the lows of 158. I am still in favour that the market may find a bit of bearishness, given the fact that we are very close to potential intervention levels, and wiping out gains in these candles could easily recur again. Sterling was slightly firmer than the other markets, but still finding good resistance around 135.5, and may actually still find that, and therefore could see a bit of profit taking come back into play and look towards the lower side of 134. Gold jumps and finding momentum improving, could see a rally back towards 4,565 to 4,590. And reassess any weakness, should find support around the lows of 4,500. A significant drop when it comes to oil, but we could see this gap filled. Nevertheless, with the market, as I mentioned before, still playing this 81 to 85 base and around 100 to about 104, continues to see this sideways drop, bounce, drop and bounce, unlikely to change. But my view is neutral. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report. I hope you enjoyed the great start today.